I would say most people at some point will probably be in some kind of auto accident, right? Now the severity will differ, and God forbid you also need a life insurance policy when you get in that accident. But there's all kinds of ramifications that come from car accidents. My point being, people hate paying their auto insurance.
Yeah.
But it's kind of because it has lost its appeal in terms of high impact, low probability. It's kind of, now it's high impact and reasonable probability.
Yeah.
Right. And so actuaries at the insurance companies try to underwrite all this stuff, or this. I mean, this is how I understand it to be. You're the insurance guy. Yeah. So correct me if I'm off base here.
Keep going.
They're trying to always look at the risk tables and say, okay, like they're like profilers, right? An actuary is a profiler in a sense. And they say, okay, well, like based on his demographical information, his driving history, his credit report, we kind of assume that this guy is a pretty responsible driver. And so we'll give him a better deal on his insurance. But this other guy, for a couple of reasons, again, it could be credit, your own personal credit, right? Yeah. Which demonstrates to them like maybe, poor decision making, a family situation, right? Like somebody that is married with kids is going to have a different kind of rating on the actuarial tables than a single person with no kids. Where you live geographically.
Yeah. Zip
right?
code. Like, it can differ zip code.
Yep. So all these things kind of go into this kind of number. And then they say, well, this guy, for other reasons, I mean, we think that he is at a higher risk of getting in an accident. We're going to charge him more. And so everyone knows that, like, hey, if you get more speeding tickets, your premiums are going to go up. If you get more accidents, your premiums are going to go up. But there's other factors. And at the end of the day, it doesn't matter if you're the guy that's getting a good deal or a bad deal. You still hate paying the insurance.
Yeah, nobody likes paying it.
And it's because kind of none of it is a good deal anymore, in a sense, right? However, people still need it. And the reason you still need it is because now you have an event that's probable and it's still high impact, right? Mm-hmm. I mean, what's the average cost of a car now? Like, what would you think? You're interesting because before you were in insurance, you used to run car dealerships. So,
I mean, your average ones that are even they've crept up over the year. I mean, depending on like our average new car had moved up to like 40 grand was like the average, even our used at the car dealership I was at, was about a $40,000 car.
Yeah. Yeah.
And so
when I was in high school, I drove a relatively nice car at my high school, and it was just, I mean, it was nothing special. It was a 2005 Honda Civic. And so you're talking about 2010, it's a 5-year-old car. It's probably worth, I don't know, $12,000, $12,000 or $15,000.
Yeah.
It was a nice car, right? Nice trim level and all that kind of stuff. But now that, like, if you go get a 5-year-old Honda Civic, so a 2019 Honda Civic right now, with like, the trim level for our car people out there, EX Special Edition. I don't know, but that's like, so you're not talking the full, the Civic Type R or something like that. That's just the nicer, trim level. That's like a $35,000 car.
So if you're looking at them into there, it was funny. So my wife just actually went and looked because her lease is coming up on her car.
Okay.
So new Honda Accords, the lower end of those were starting at like 33 for a new car.
Sure. Okay.
Higher end was about 40. But if I started like, all right, if we go a few years older, well, you're still $25,000 for one. And kind of on the car market, once they hit like 20, they don't really go lower than that for a while.
And the electrical components and the way that they're built. And I know like Toyota shifted from being able to buy individual parts to, they call them kits. Mm-hmm. And so then you can't just replace one little thing. You kind of got to replace like your whole door electrical module, and the price just goes significantly higher. So now what you end up with is when you get in that accident, it costs a lot more to fix cars, right?
Oh,
way more. And if you total them, it's way more expensive. So now the insurance company is carrying significantly more risk, and people are driving more distracted. Mm-hmm. So now you have a higher likelihood of getting in an accident. And then let's talk medical for a second, because medical, like, just to take a stab, you think the cost of medical healthcare costs has grown faster or slower than general inflation? Faster, significantly faster.
No doubt.
So now if you have to use the medical coverage and insurance companies are paying out on the medical coverage, right? And remember, your health insurance is only going to pick it up like after your auto is paid out fully because they're the ones that hold the initial liability, not your health insurance.
Yeah.
And so since they have to do that, it's like this whole other cost. So these are all the things that start going into insurance policies. Again, it's like not a fun bill to pay. And I get that. I don't love it. And if I was worth a ton of money, you know, if I was Scrooge McDuck himself, would I consider self-insuring? Probably. Consider it. I don't know for sure. I'm just saying I would consider it, but I don't have a vault full of gold coins I can swim in. And so what changed for me, like my epiphany moment around property and casualty insurance. So we live in Southern Utah and there's some nice cars in Southern Utah. And I used to drive a F-350 Power Stroke. This is an 8,000 pound truck. I was by the Green Springs intersection there right off exit 10, ton of traffic, right? And a Lamborghini thought it was a cool idea to stop for a yellow light. A Lamborghini, dude. I almost rear-ended a Lamborghini with an 8,000 pound truck.
Yep.
Right. And I just went, oh my gosh, I would have driven up over the top of this car, annihilated it, which is probably a $250,000 car. And then what is the liability on whoever I would have hurt in that scenario, right? And I wasn't like recklessly driving, right? But super fast sports car can stop super fast and they forget, you know, big truck behind you. You know, all of a sudden, you know, crashes happen. So that's when it just really clicked for me, like, ooh, I remember calling like my insurance agent to be like, I just want to review my coverage. And I don't really care what I'm paying anymore. Like I want to pay a fair rate, but I want to make sure I'm properly covered.
Yep.
So that is what I want to talk primarily about. Now that we've gotten out of the way that we get it. Paying insurance sucks. There's a reason why it costs what it does. And there's a way to use it effectively, right? So we're going to talk primarily personal insurance today. Homeowners insurance, renters insurance, auto insurance, personal liability.
Yeah.
Okay. I brought with me a quote from the quote I got last year for my insurance personally. And I think it'd be really cool to just go through this and talk about what are these items and what do they cover? Yeah. So how does somebody understand what they're paying for? Because if this sucks to pay for, we want to at least know what we're paying for, right?
And that's 90% of what I do is I will ask my clients how do they come up with their limits of liability? Well, that's just what my insurance agent gave me. Yeah. And you start getting into it and you start asking them questions. That's where the aha moment goes into when you're like, all right, bodily injury. If you hit into me, they're only going to pay out $25,000. Do you have money to cover the rest? Or how much is medical bills? They're like, I don't have that.
Well, and here's the problem is if you have the money to cover it, you want to give it up.